12, depletion of mineral resources. So depletion, it is the exploration and evaluation of mineral resources, which include mineral oil, natural gas, and similar non-regenerative resources. So what do you mean of depletion class? So the reduction, depletion means the reduction in the number of quantity of something. So like for example, as we mentioned here, it is the exploration and evaluation of mineral resources, which include minerals, oil, natural gas, and similar non-regenerative resource, which is it is the reduction of this number. Baga, nababawasan siya. So the recognition of exploration and evaluation assets in the absence of PFRS that specifically applies to a transaction, other event, or condition, management shall use its judgment in developing and applying an accounting policy that results in information that is relevant to the economic decision-making needs of users and reliable in the financial statements. Measurement of recognition. The measurement of recognition is exploration and evaluation assets shall be measured at cost. We'll measure that by cost or at cost. So the elements of cost of exploration and evaluation assets are acquisition of rights to explore, topographical, geological, geochemical, and geophysical studies, exploratory drilling, trenching, sampling, and activities in relation to evaluation the technical feasibility and commercial viability of extracting a mineral resources or resource. The presentation or classification of exploration and evaluation assets, an entity shall classify exploration and evaluation assets as tangible or intangible according to the nature of the assets acquired and apply the classification consistently. Some exploration and evaluation assets are treated as intangible, like drilling rights. So whereas other are tangible, vehicles and drilling rigs, to the extent that the tangible asset is consumed in developing an intangible asset. The amount reflecting that consumption is part of the cost of the intangible asset. However, using a tangible asset to develop an intangible asset does not change a tangible asset into an intangible asset. So class, as I was discussing, I think yesterday on the other subjects, or I think you have also taken the counting 6143, which is we discuss about the intangible asset, which is the intangible assets are assets na hindi natin nakikita, hindi natin nahahawakan, but it is an asset that produce also millions, di ba? Like copyrights, patent, it is the intellectual idea. So I have explained that already sa inyo, the intangible asset by yesterday. So hindi siya pwedeng i-convertible to intangible sa magiging tangible siya. So because the tangible assets are merely those assets that we can touch, we can feel, we can hold it, makikita, mahahawakan, like land, building, equipment, machineries. So I know you already and I already kumbaga explain it paulit-ulit sa inyo when we discuss property, plant, and equipment. I think last meeting we had, and which is the property, plant, and equipment is one of the tangible assets also. So reclassification of exploration and evaluation assets. For the reclassification of exploration and evaluation assets, An exploration and evaluation asset shall no longer be classified as such when the technical feasibility and commercial viability of extracting a mineral resource are demonstrable. Exploration and evaluation assets shall be assessed for impairment and any impairment loss recognized before reclassification. So for impairment, exploration and evaluation assets shall be assessed for impairment when facts and circumstances suggest that the carrying amount of an exploration and evaluation assets may exceed its recoverable amount. When facts and circumstances suggest that the carrying amount exceeds the recoverable amount, an entity shall measure, present, and disclose any resulting impairment loss in accordance with AS 36. For disclosure, an entity shall disclose its accounting policy for exploration and evaluation expenditures, including the recognition of exploration and evaluation assets, the amount of assets, liabilities, income and expense, and operating and investing cash flow arising from the exploration for an evaluation of mineral resources. For the government grants, alam naman natin class na there is maraming ano yung gobyerno, if ever dun may ano talaga sila, may part talaga sila. So for the objective and scope, the objective of PES 20 is to specify the accounting treatment and disclosure for government grants and other forms of government assistance. So it shall be applied in accounting for and in the disclosure of government grant and in the disclosure of other forms of government assistance. So it is defined as government refers to government agencies and similar bodies, whether local, national, or international. For the government assistance is action for government designed to provide an economic benefit specific to an entity or range of entities qualifying under certain criteria. Government grants are assistance by government in the form of transfer of resources to an entity in return to past or future compliance with certain conditions relating to the operating activities of the entity. Grants related to assets are government grants whose primary condition is that an entity qualifying for them should purchase, construct, or otherwise acquire long-term assets. For defined terms, grants related to income are government grants other than those related to assets. Forgivable loans are loans which our lender undertakes to repayment of under certain prescribed conditions. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Recognition of government grants, including non-monetary grants, grants at fair value shall be recognized when there is reasonable assurance that the entity shall comply with the condition attaching to them and the grants will be received. Measurement of government grants, presentation of grants related to assets. Government grants related to assets, including non-monetary grants at fair value, shall be presented in the statement of financial position, either by setting up the grant as deferred income or by deducting the grant in arriving at the carrying amount of the asset. Presentation of grants related to income. Grants related to income are presented as part of profit or loss, either separately or under a general heading such as other income. Alternatively, they are deducted in reporting the related expense. Government assistance excluded from the definition of government grants are certain forms of government assistance which cannot reasonably have a valid place upon them, and transaction with government which cannot be distinguished from the normal trading transaction of the entity. The government assistant class, like for example, simple explanation of the government assistance, the SAP. So it is government assistant when there is a pandemic. So like for example, may mga calamities, so they are giving government assistance. Objective and scope. Borrowing costs are finance charges that are directly attributable to the acquisition, construction, or production of a qualifying assets that forms part of the cost at that of that asset. Like for example, such costs are capitalized, or other borrowing costs are recognized as an expense. So for actual imputed cost of equity, including preferred capital not classified as liability. A qualifying asset measured at a fair value, for example, a biological asset measured in accordance with PAS 41, or agriculture. As I mentioned, I think I have discussed this already in last meeting, for the agriculture, di ba? Yung farming, yung sa animals, yung sa poultry, yung sa yung sa hogs raising, sa mga baboy na mag-alaga. Inventories, qualifying assets, yes, inventories that are manufactured or otherwise produced in a large quantities on a repetitive basis. So ito naman sa mga malalaking kumpanya, sa mga manufacturing companies that having a business. So the borrowing cost is interest and other costs incurred by an entity in connection with the borrowing of funds. So a qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. So for the recognition, an entity shall capitalize borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset as part of the cost of that asset. An entity shall recognize other borrowing costs as an expense in the period in which it is incurred. So for the borrowing costs eligible for capitalization, specific borrowings, to the extent that an entity borrows funds specifically for the purpose of obtaining a qualifying asset, the entity shall determine the amount of borrowing costs eligible for capitalization as the actual borrowing costs incurred on the borrowing during the period less any investment income on the temporary investment of those borrowings. For general borrowings, to the extent that an entity borrows funds generally and uses it for the purpose of obtaining a qualifying asset, the entity shall determine the amount of borrowing cost eligible for capitalization by applying capitalization rate to the expenditure on that asset. The capitalization rate shall be the weighted average of the borrowing cost applicable to the borrowing of the entity that are outstanding during the period, other than borrowings made specifically for the purpose of obtaining a qualifying assets. So in excess of the carrying amount of the qualifying assets of recoverable amount, when the carrying amount or the expected ultimate cost of the qualifying assets exceeds its recoverable amount or net realizable value, the carrying amount is written down or written off in accordance with the requirements of other PAS 936 impairment of assets or PAS 2 inventories. And for the disclosure, so as we already discussed this, it's actually class, it's a review for those discussion one by one na we have discussed on the other part of our previous part of our discussion. So na-input na yan. So for the disclosure, an entity should disclose in the notes of financial statement the amount of borrowing costs capitalized during the period and the capitalization rate used to determine the amount of borrowing costs eligible for capitalization. So